Hello, everyone. Welcome back to, I guess, a slightly different look, but you can see on the screen. Actually, we're slowly making the transition to the .com website. You can see .com up here. And it was actually suggested to us that our logo was a little bit too busy to be sort of mass produced and disseminated on the net. So we went through a whole process of what should our logo look like, the whole thing, and we decided as a team on this new logo. So it's clean, simple. Did notice a few people on Twitter and stuff were making reference. Hey, you guys changed your logo. What's going on, man? So a little bit of a different look, maybe a little more professional, but nonetheless, that's our new sort of image that we're working here this morning, and. Hey, people are saying it looks modern, classy, I guess. I'm going to assume that that word means classy. Sexy. Ooh, there you go. Anyway, I did this as a public video. We do these sort of weekend broiler chicken show episodes publicly. It's a little bit less structured than what we do through the week. When my co-host Thomas the Bear is around, I actually let him sort of dictate the pace, and it's a little more structured. So this is a little bit of just sort of ad lib, free for all, having fun, just looking at markets, looking at charts. I actually do like the idea, considering we are coming into the end of the year. I do completely understand people are slightly preoccupied with a festive event that I think happens right around Tuesday or so. The interesting thing, because my son is severely disabled and he and I are basically just living on an island out here on the West Coast, I don't really celebrate Christmas that much. Liam sort of understands it, but we live this really weird life with all these support groups and stuff around us. So Christmas is kind of a weird time of year for me, but I do like to sort of immerse myself in the site, and I've been working my butt off. We're trying to reduce Brian's workload a little bit here on the site. So we're trying to automate these school programs, and I've been working my butt off trying to record videos for the automated program going forward. So I'm super busy. As well, too, we just got back from California. Andrew, are you over your cold yet? It's like 90% of the way through me now. But man, what a terrible, crappy past week we've had. All our crew that went down to California all came back with a cold. And poor old Mr. Habsburg is sitting over there in Austria nursing his cold. Talk about a nightmare flight back from LA. But anyway, that's here nor there. Yeah, I'm going to try and refrain from the massive, insane workload I've had for the past couple of years. Actually, to be honest with you, I want to get back to trading, and taking day trades and hanging out in the swing trader room with you, Zach. I mean, that's what I really want to get back to doing. And in a weird sort of way, it's kind of funny how business goes this way, but I started the school up just to simply give TRI some working capital so we could do things like build fancy websites and stuff like that. And over the past few years, this school has just turned into an absolute monster. Hello, brother Brian. Merry Christmas to you too, sir. Brian Children Home. Oh, that's an interesting name. Anyway, so hopefully what'll end up happening here over the coming year, and I've actually noticed this is it makes me so happy, but sort of 1 + 1 = 3. We have site members, and I think I've talked to you guys lots about this recently. It's great to see everybody's hanging out in the lounge and posting trades and ideas and just having a lot of fun. I mean, Sjord has done such a great job with this website and Rocket Chat and all that. Kiran, nice to see you got a nice level hit here on his Litecoin trade. Really good working example of the bot, right? Hopefully everybody can see 1 low, 2 lows, 3 lows. Nice consolidation in here. There's the 25 entry level for the bot. And now he's got to the point where he'll move his stop to scratch and, if anything, walk away with a very small profit if this thing craps out. But my hunch is, Kyran, I think you're going to see your target hit here. So way to go, dude. Nice work. And you know what it is it just shows me that, number one, this is the model that I used when I was a prop crude trader. I mean, I had to, Nebraska, make money from trading. If you're not making money, get the fuck out of here. All that kind of talk. The model works. And what I think is more important is I've been able to articulate and convey the model to students, and they're in the market working away, making money using this model. I mean, it's not my model. It actually belongs to the universe. And the more people that are using it just to simply help them relieve the anxiety of trading, because keep in mind, when you're under the gun and you have to trade and you have to make money from trading, it is an extremely stressful job. So nice to see. In fact, actually, Andrew, didn't you just post a setup earlier this morning? I seem to recall that you're rocking. Oh, yeah, here you are. So here's Andrew doing his bot. And he actually got up to the point where he can start locking in profits now. So fantastic work, everybody. I mean, if anything, this is validation of exactly why I'm on this planet. This is exactly why I'm here doing this, is I want to try and help you guys. It's making money from trading and all that kind of shit. It's hard work, and this is validation of everything that I've been wanting to strive for here for like the past few years. So congratulations, everyone. Nice work, guys. Nice work. And in fact, actually, I think we even had a new gentleman that popped into this site. Yeah, Morali, I hope I'm not butchering your name, but anyway, he popped into the site and said, just joined up and I want to rock and roll and have fun with you guys. And so we're all like, welcome, have some fun. Doubles, it's nice. I swear this guy, Joshua, he's my hero. And he drives a really cool car too. So, that always helps. But bring in the PMA, positive mental attitude. But anyway, long and short of it here is great to see that the community is just rocking and rolling even through the holiday here. And what I really wanted to point out here, we just recently, this is a collaborative effort with Mr. Satoshi Davamoto. Anyway, he found a trading system that he really liked a few years ago while he was a student, and we affectionately called it Davos because I love to name setups after students and after people that really like the setup. And, I even tell everybody my number one job is to make you famous. So, you all know Joshua. Let's see if I can show you a picture of Joshua. Joshua is actually a pretty mild-mannered guy. If you were sitting in the, stuck in traffic on the freeway, other than his fancy car, you wouldn't really be able to distinguish him between all the other humans on the planet. But every once in a while, Joshua pops his cover off, and we get to actually see who he really is. But I don't have the picture. Where the heck did the picture go? No, it hasn't been that long. Anyway, I thought I had it right in front of me, but maybe not. I wanted to show you a picture of Joshua, our demon gap hunter. There he is. So Joshua is pretty mild-mannered, but every once in a while he lets his guard down, and there he is. So, and for the record, if you ever see this, I'm talking about Joshua. Actually, I think I did. Yeah, it's awfully tough to get those wings in his car. But I think I did even tweet out a picture of Joshua recently, just for the record, because I want to make him famous. When I was in LA, we had a really nice afternoon on Santa Monica Pier, hanging out with Joshua and the boys. But I don't know whether the pictures are there. Oh yeah, here we are. Where is Joshua? Joshua, you're around here somewhere. There he is. Handsome dude. Anyway, I suppose I should quit blabbing here, but I just, the point that I wanted to originally make out of all of this conversation was Davos, and then we had an awesome coder, and he was my host when I was in the Netherlands for a couple nights. In fact, he drove me from Berlin to Amsterdam San, who actually did the algorithmization of the Davos. And then finally, Sjord, our master programmer on TRI, integrated the algo into the Rocket Chat system. So on a daily basis, we're just getting spit up signals day after day after day after day. It's just so awesome. And, you know, I mean, like Ethereum here, man, that was one hell of a signal the other day. Let's see if I can show you what that chart produced. It was a really cool signal. It's one of these charts. One of these charts is not like the other. Which one is it? Not that one. Maybe it's over here. Yeah, here we are. So there's the Davo signal on Ethereum. Nice little doji bar there to help you get in. And wow, what a trade. Damn. So, and actually even Sjord this morning was just confirming that our systems and everything on the back end is seeing these signals and it's just rocking and rolling. So, you know, these are a bunch of the recent signals off of the Davo, and you can see they're just, some of these names are just rocking it, including that Ethereum. So great signal, just beautiful. Anyway, the point of the matter here is, you know, at TRI, we're all about 1 + 1 = 3. I love the fact that we're all sort of working in conjunction to make this a better place, and we're starting to see the results. Really great trading. As well, actually, and it's really cool, one of our site members who's a you know, helped us out immensely. He was a recent level 1 graduate, and then volunteered to be the level 1 TA for the upcoming term. So he's very active on the site. He's also in the level 2 program. He's a fantastic computer programmer, and he's working away on building algos to identify El Tangonator setups. So he's still working away on that. When that gets integrated on the site, we'll integrate that into the Kairos system and the signaling system for you. But you know, I'm seeing lots of these coming up here. And if anything, you know, this is, you know, for those people that are crypto oriented, I'm quite surprised. I'm quite pleasantly surprised to see how the alts have come back in earnest. I mean, they are really rocking it here right now. So that's really encouraging. I suppose this counter trend rally, if you will, right now will probably continue until Bitcoin does roll over here. And for the time being, we seem to be pointing higher, so I might as well enjoy the market when they say, you know, I used to work with an old buddy who used to always say, make hay while the sun is shining. So Bitcoin's, you know, caught a bit of a bid, and some of these alts are just going nutso here. So enjoy it. You know, it's like I said, with that Ethereum chart, if you can hop in on the signals, man, there's some sick ass money to be made. And as I showed you just a moment ago, the guys in the lounge here, they're taking the trades, they're taking the setups, and they're rocking things. So congratulations, everybody. One thing I did like to do recently on these weekend shows, which I think is kind of a it's a nice sort of, you know, like, what the hell is Brian talking about, where I just simply run through when you know, when I last did one of these broiler chickens shows, because, you know, this is my opportunity to talk to the public and just update you, just give you little pieces of you know, sort of follow through to help you understand the tweets. I think this was the last one we did per the broiler chicken show. I think that was last week was the last one we did one. Yeah, on the 16th. So on the 17th, I left off that broiler chicken show with sort of the idea that it felt like the market was uppy. And we had a little bit of a bullish bot set up coming out of that weekend show. You know, on balance, I'm still thinking that we need to come off here a bit. But, you know, if anything, I think the community was well served just with our sort of idea that, you know, down here was a terrible place to be hunting shorts. And you can actually make the argument that internally the market was setting itself up for some sort of counter trend rally. So we actually had bullish setups coming out of the last broiler chicken show that we did off of the lower time frames. And, you know, it's super important when we talk to, especially with this YouTube audience, that you understand what type of time frame trader you are. If you are an investor, if you are new to crypto, if you're kind of like, hey, this guy's kind of fun. He's interesting to listen to. I don't really have that long of a track record trading or investing. Then these lower time frame setups are not for you. Please understand that these lower time frame setups are definitely for the more advanced. And so I would prefer that we really don't go into lower time frame setups when I do this broiler chicken show, because I just don't want to confuse the hell out of you. But at the same time, I do remember last week we talked about the market being uppy, and sure enough, wow, we certainly got some uppy there. So that's sort of where we left off. Lots of rants. For the record, I still believe that the public never really voted, in my opinion, for Donald Trump. I think that his opponent, Hillary Clinton, the American public just simply did not want her in power. And so as a result, they just voted for whoever the other person was. I think this recent congressional election that we've gotten down in the States has shifted power back out of the Republican Party's firm control of the U.S. government. And really, on balance, you don't really ever want like one political party to own a big government, especially like in the United States of America, because that means they can go and change things and they can tinker with the system. Interestingly enough, coming out of this event in 2016, the American political system was heavily skewed towards the Republicans. And they just sort of had like a blank check. And the initial reaction, interestingly enough, I would actually argue was extremely bullish. But maybe a little too bullish. Here is that event right there, and you can see how the stock market just went into orgy mode, which unfortunately, if you played the markets long enough, you're going to understand that what goes up must come down, and eventually everything sort of gets settled in the wash. And I might make the argument, and that's sort of what this tweet was, is I actually wonder whether this, basically this market from about this point right here all the way up to basically right into, when was the congressional election? Wasn't it on October? I can't even remember. Oh, you Americans, you should know this. When was the congressional election? Zach? Jonas? It was October, eh? So basically right up into this window up here was a one-way market. And, one might argue, especially when we do simple statistical studies, things like fibs, at the very least, you should have expected a 50% retracement of that big move. And oh, gee whiz, what a coincidence. Look where we are now. There's also a cheeky little gap right there. So, it makes sense what happened here. November 6th, is that when the election was? Yeah. Was it all the way over here? Can't even remember. So you could even argue that maybe the higher ups saw the sort of the writing on the walls that the Republicans were going to lose control of the U.S. government. And so as a result, we're going to get like a little bit less of a pro-business, pro-right-wing policy out of government. And, if I understand correctly, Mr. Trump's going to have a bit of a challenge over the next couple of years, to say the least. But anyway, I do got to blow my schnoz, so I'm going to put myself on mute for a moment, and let's let everybody just digest this image that you see on the screen right here. Hold on. All right. So yeah, and I suppose the interesting thing, Dav's actually joined us here. Our Da Vinci Davo signal on the system. Satoshi Davamoto, I see you there. There he is. Hey, big guy. Anyway, so just to further this, like I said, the whole purpose of this, I just want to sort of back up. I find it really interesting that even some of his insiders are kind of like, well, we don't really like the guy, but he was better than the other choice, so we're gonna stick with the lesser of two evils. It is interesting. I'm seeing a lot of tweets and a lot of stuff about how Mr. Trump is actually isolating himself in government. I saw somebody put out a tweet recently. I thought it was really cool. They said there's like three pillars of power in the United States. There is Hollywood and the media. There is Wall Street, and there is, and you know, to a certain degree, you could argue the Fed sort of wrapped up in all that. And there is the military. And, you know, obviously, right from the get-go, Mr. Trump and Hollywood didn't get along at all, and the media. I did find it interesting recently that we're hearing talks that he's isolating himself from things like the Fed actually threatening to fire the Mr. Powell that he just put into power, which is going to be an amusing, you know, soap opera unto itself, how he fights with the Fed here. And then what I thought was really interesting just recently is for some reason, Mr. Trump has just decided that he's going to walk away from Syria and he's going to walk away from Afghanistan, which is, you know, if anybody's a student of history, you know what happens when vacuums are created. Other countries will quickly come in and exert their authority in said regions. You could argue that Russia historically has always owned Syria. So if anything, the Americans tinkering in Syria, really, they had no business being in there to begin with, but that's a whole other conversation to begin with. But I found it fascinating how the reaction out of the American military complex about his abandoning of Afghanistan has really not resonated well with the military complex. So as I said just a moment ago, it feels like Mr. Trump is isolating himself, which is scary because, of course, you know, he has control over the nukes, and you never know what the heck he's going to do. But I thought it was really interesting as recent Secretary of Defense basically handed in his resignation. Whether it's accepted or not, I don't know. But man, talk about a perfect storm for a classic fear cycle apex. I mean, this is incredible how you can't write better fiction than reality. You know, like I sit and talk to students about 17.5-year cycles, and you know, through the last fear apex, we had Jimmy Carter as president of the United States, total lack of confidence in him. And you know, you had Moscow, the 1980 Olympics. They were, you know, Soviet Union was at the top of its game. And the sentiment away from the United States was palatable, and it's incredible to see how that's sort of, you know, playing out again. You know, the United States is picking fights with people all over the place. Now, like I said, with the change in government, and I might make the argument that a big part of what you're seeing here in the stock market is the market sort of realizing that, okay, well, government is now shifted back towards sort of a more balanced approach. And a lot of the, you know, make America great, all that kind of stuff, you know, the fighting with trade partners around the world, that might actually be tempered down a bit. We'll see what happens. Only time will tell. But I definitely think that the stock market basically saw that the balance of power shifted in the United States, a little less pro-business government. And I think a lot of what you're seeing in the stock market right now is nothing more than them just taking back some of this insane artificial rally that was built into prices following Mr. Trump's initial election. And I also make the argument, too, you know, if we actually look at Fed policy on balance, you know, they're just simply, you know, there's an old adage that says when the Fed can raise rates, they will. And they will only lower rates when they have to, because you have to remember that the Fed is basically a puppet of the banks, and the banks, what their real motivation is just to maintain their profit margins. just to make sure that the game just keeps going on. People keep taking out car loans, people keep taking out mortgages, business is constantly coming to them for financing, and of course that interest rate spread is their profit margin. So I don't necessarily think that the banks really want to derail the economy, but when interest rates are at historically low levels, it sort of handcuffs them a little bit. And the only reaction that they can possibly be is to do things like quantitative easing, because really their primary tool in the marketplace is short-term interest rates. So if short-term interest rates are at zero, well, they're kind of handcuffed. So it makes sense to me that the Fed is, raising rates while they can. We also have to understand too what happened in the last fear cycle at the very end of it. And at that time, there was a lot of confidence in the Fed because of the hyperinflation scenario of the 1970s. And so, the late 70s, early 80s, it was called the war on inflation. And what's really interesting is the US dollar index went very, very high. And to the detriment of all the world economies. They all didn't like it at all. But, unfortunately, when you are, what do they call it? Hegemony, I think. When you're driving the bus and you control the means of operation, you can dictate policy. And so until there is another alternative to the United States of America, basically the Americans are driving the bus here. So what's really interesting, and I saw this happen in 1980, and I was still a very young boy then, but I do remember living through that cycle where basically the whole world was basically pushed into a recession. And as Da Vinci said, you remember interest rates at 30%, right? That was that hyperinflation scenario, and the Fed was given the green light to just do what they had to do to try and stop this insane hyperinflation. We're not necessarily in that scenario right now, but one might argue we're probably actually the other side of it. And interestingly enough, the Fed would really like to have some inflation in the system. That way it sort of, maintains that bankers' sort of business model. And the worst thing possible for bankers is deflation. Now, the interesting thing is, you've heard out of the Fed recently talk about how they're trying to bring interest rate policy back to what they would consider a neutral stance. And just at the point where they were feeling like, okay, we got things basically neutralized, we can actually see it in asset prices. I like, me personally, I'm a fan of listening to the market proxies versus listening to some government issued, inflation statistic, because of course they're highly manipulatable. But if we actually look at this relationship, the spread between the TIPS, which are inflation protected bonds, and the TLTs, which are not inflation protected. If investors are willing to pay a premium for that TIP inflation protection, it must mean that investors feel as though there is a need for that inflation protection. And we can see that basically over the past 5-10 years, basically the trend in inflation in the market's eyes has just not been there. In fact, we could argue that this is deflationary. And there's the zero reading, and if we're in a negative number, that means there's deflationary pressures. I think the economy was working towards getting back to parity there, and you can see how everything was pointing up, and then all of a sudden something recently just broke. So I can understand, and keep in mind also too, the Fed is very slow. They react most importantly to employment numbers, and they're very reactionary in their policy. They're not proactionary, they're reactionary. So that means that the Fed will be the last thing to move. So interestingly enough, coming out of those election results, what we saw was a dramatic fall in things like energy costs. Like crude oil has just fallen out of bed. So this is being reflected in that inflation deflation concern in the market. in that we were working our way back towards at least just getting back to a world of inflation, and the market has just fallen apart here. Now, why is this as strong as it is and not, we'll look at crude oil prices in a bit, and they're just completely on their knees, and that is that employment is still fairly strong. Keep in mind, employment's a lagging indicator, and the Fed will only react when they start to see the employment numbers change. So for the time being, I think actually the market has relieved that inflationary pressure in the these market-based proxies. And if anything, what we're hearing out of the Fed now, I heard just over the past couple of days, is, okay, well, we are going to watch the data very closely, and maybe we've gone too far. They haven't said that yet, and if they do say that, the market will be happy. But I just wonder whether this isn't like catastrophic situation. This is just back and forth. I wonder whether a lot of this sort of inflationary premium that was built into the market was predicated on just a very right-wing leaning government. And now that's changed. A lot of that fluff has come out of the system. I suppose, what does our future sort of look like? We all know that recessions usually happen in years that end in 8, 9, 0, 1s, and 2s. Just go back and look in your history lesson. You'd be surprised how often recessions happen. So this is the Junior Bush days. There's the dot-com boom, and this was the subsequent recession. And what you should see is that equity prices fall by about 50% through recessions. That's actually pretty normal. And then here is the Obama housing market peak. Again, markets usually have recession 8s, 9s, 0s, 1s, and 2s, and sure enough, down we go through that window. So pretty business as usual. I talk at length on our site about how will we know when the next recession comes. You should follow things like the yield curve. And as it stands right now, in the sort of area chart that I have on here is the spread between the 2 and the 5s. You can see, and this is their price scale, you can see they are fighting, at going inverted here just on the short end, but the long end is still relatively happy. If we start to see these numbers start to invert, then we know that the recession is imminent. It's not there yet, and I wouldn't be surprised if in a weird sort of way, this recent sort of cooling down in the stock market, like I said, has more to do with repositioning assets given the structure of the U.S. government versus actually us going into recession. I don't see the recession here just yet. When this does invert, and of course on our site we'll be talking lots about this at length, we will see this, that'll be sort of our official 6-month notice that the stock market is about to really hit the fan. As well, too, we always have to be cognizant about what does financial asset crisis look like. On the other side of this is what we call the TED spread. And you can see that to actually get the recession going in earnest, the spread between corporate borrowing rates and the U.S. federal government's borrowing rates, and now we're using the Fed fund futures. We used to use T-bills, but that changed a while ago. Through the financial asset crisis, people lost confidence in the U.S. Treasury. So they sort of shifted everything over to the Fed's balance sheet. You could argue that, once this spread gets going in earnest, and 1.0 is sort of our magic number when we should start freaking out. And we all remember that this was basically when the financial asset crisis got going in earnest and all hell broke loose, and they had to do things like quantitative easing. So we're not there yet, thankfully. But, let's keep an eye on this Eurodollar market. The point that I would make is that the Fed either has one of two choices. They can ignore the corporate interest rate market and let this spread go wider and wider and wider. And if they do, and it goes above 100, we're going to be talking about financial asset crisis. We're not going to be talking about recession. We're going to be talking about outright collapse. Or they can keep raising rates. And if they keep raising rates, that's going to force the curve to go inverted. So it's almost like a you're damned if you do, you're damned if you don't scenario here. And I've tried to convey that to the public, but I just don't think the message is getting across. The Fed doesn't really have a lot of choice here. They've got some wiggle room with the TED spread sitting at 0.4. We were starting to trend higher in earnest, which was scaring me. But you can see just recently with this break in inflation expectations, that spread has come in a little bit. So if we're really lucky, we just go sideways here for a while, and it's just a whole bunch of job owning. And if we're really lucky, like I said, the Fed doesn't have to crank rates up dramatically. The market itself might have relieved that inflationary concern. And if that's the case, what we really want to be following is this euro dollar market or the corporate interest rate lending market. A whole bunch of gobbledygook. I'm sorry, guys. I don't know. Hopefully I'm giving you some good value here this morning. I'm just sort of talking what I see here. So, does the market break here in earnest from these levels? It could. I mean, I suppose we could have like political issues if Mr. Trump starts, going down the sort of, resignation road, and lawsuits and stuff start getting going in earnest, if people lose confidence in his administration. Maybe that sort of plays out kind of like late 70s, Jimmy Carter and Gerald Ford's lack of confidence in the system led to sort of a malaise in stock prices. I don't know whether I have this. We should be able to see this. Where would I have this? It's not here. I think I have it over here. Yeah, maybe this will show us. So if we go all the way back, going, now we got to keep going further, much further. Oh, maybe this doesn't go back far enough. This is only the diamonds. Damn. Oh, well, maybe another day I'll show you what the 1970s, early 80s stock market looks like. No doubt about it from this perspective. And I kind of got the feeling on Thursday, Friday that it felt like they're just throwing the baby out with the bathwater. We are coming up to a 1.618 here on the Dow, which should see some play. That's pretty important fib level, the golden ratio. And it's interesting to see things like momentum indicators. The relative strength index here is at 25 now. And you can see the RSI just does not like to be below or, in the oversold zone for too long. We've been having this debate on the site. Is there cause? Is there a trade here to look for the market to counter trend rally and fill in these gaps? I think there could be. But I don't know. It seems to me this isn't really the best time to try and be a hero and pick bottoms in the stock market. If anything, we almost want some sort of big capitulation dump here. I did see one, I think he's a little bit more left-wing analyst on CNBC, just threw it out there. I think his name is Chris Matthews, and he said, well, maybe Mr. Trump's going to resign. I have no idea. But maybe that's sort of a capitulation event. Who knows? Maybe he'll throw it out there. He'll threaten to resign. Could be. From a options perspective, and I did put out a couple tweets about this through the past week. There are some really interesting ideas that are perking up. In fact, actually, Zach here in the lounge, he had mentioned this oil stock that, based on a formula that I developed when I was an options broker, suggested that we could actually start thinking about taking long shots in the derivatives markets heading into sort of the spring and summer. And if anything, I kind of like that kind of thinking. Buy when it snows, sell when it goes. What does the market look like now? It's not going to look the same way as it will in the summer. And of course, the exact opposite. Back in July and August, when I was pounding the table about feeling bearish of the market, people were laughing at me. I mean, there was one guy on on Twitter who actually I really respected that was giving me shit over saying that the market was going to roll over here. So, I mean, that's Twitter for you, I suppose. But now think of it the exact opposite now, right? Now that everybody and their brother is, and you turn on the TV and everybody's all bear, 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 bear. Maybe we should start thinking about, are there long opportunities for us to be thinking about into the spring? And, the classic cliche goes, sell in May and walk away. If you are a proponent, a fan of Wyckoff, then you should probably look at a chart like the stock indexes and just simply see that. Where's probably the best one to show you? Too many charts on here. Anyway, I had a longer term chart up here, but what did I do with it? Yeah, it was this one. You should think of this as sort of the markup, consolidation, get everybody bearish, right? Then markup, then consolidation, get everyone bearish, right? And the whole Wyckovian process is at work here. Is this the bottom? I don't know. We'll only know after the fact. But I might make the argument that, probably we should start thinking about what does the spring and summer look like. So, you can look at things like derivatives markets for help. And like I said, with guys like Zach, who's in the level 2 program and working away on learning my crazy formulas from my options brokers days. And we see all these gaps and, you see trend lines and here we are way down here. Does it make sense for us to get some sort of dead cat bounce up into this area here? Sure, that seems totally logical. Can we make money from the derivatives point of view? Actually, I think, yeah, there's quite a bit of money to be made here. As well, I was even looking at stocks like even General Electric. I mean, they're throwing the baby out with the bathwater here. I just did a really simple 52-week range, 50% level. My hunch is we're probably going to rally up and fill in this gap up in here. That's just a big old hole. There's a bunch of gaps all in there. So I'm out there pricing. I haven't pulled the trigger yet on any of these ideas, but I am out just watching. And of course, me, good old Brian, I like to see W's and stuff like that in price. So I'm just sort of just watching, just biding my time. And I would ideally, for these kind of names, I'd like to see some sort of capitulation pivot, whether it be the Fed come out and say, okay, we were just joshing, we're not going to raise rates anymore. There is one he's a Wall Street guy, Art Cashin, and somebody was posting in the lounge this morning. He's been coming out saying he doesn't think that the Fed's going to raise interest rates at all anymore. But, all we need is some sort of conciliatory statement. And then also, too, what I would say is, like I said before, how do you explain what's going on here other than I like the idea that as of January 1st, the new U.S. Congress will be in power. We will have a whole sort of fresh approach to the market. And I have a feeling that's what's happening a lot here. And then also, too, you could make the argument, especially anybody who's involved in crypto through 2018, there's a lot of tax incentive trading going on right now as well. So those people that are in any of the big tech stocks that have done so well over the past few years, there's probably incentive for them to get business done into the calendar year end, tax loss selling, all that kind of stuff. So, considering the political situation, why would the market bottom ahead of that January 1st event? The only reason that would make me feel as though a bottom will come in here relatively shortly is because that year-end event, you can see because remember, in the stock market is 3-day settlement. So you're going to have 1, 2, 3. If you're going to do any tax loss selling and it's going to be on record, for 2018, it has to be done by the 27th. So my hunch is if there is going to be some sort of pivot, it's going to come in somewhere in this window here. Once we're into the new year, then all the new government will be in place, and any tax incentivized trading will be history. So I'm looking for some sort of pivot here into the end of the year. That wouldn't surprise me. I would also say too, though, and be careful here, cryptonauts. I do believe that to a certain degree, Bitcoin has caught a bit of a bid in the face of this. Oh, if we can't be in stocks, where are we going to be? Is there anything moving up? And that's sort of this conversation. And ironically enough, I still think Bitcoin is a leading indicator here. I think Bitcoin, historically, we used to use the semiconductor stocks as the ultimate leading indicator in the stock market. And I think the semiconductor stocks were definitely affected by the whole Bitcoin mania. So you could make an argument, Bitcoin peaks, the semis take some time for that peak to be reflected in earnings. And of course, all the public's coming in here buying AMD, NVIDIA, whatever, chips, whatever, that's reflected in their earnings. Then the market comes off and the semiconductor companies go, well, there really isn't any other buying. So then they peak. And then eventually that cascades into the broader economy. And it's a really good rule of thumb, right? Semiconductors almost always lead the stock market. So it is interesting to see that Bitcoin's caught a bit of a bid here, but I just wonder whether some of this bid might just be, look, I've got to have money in the market working. I can't have it in big stocks. Where am I going to park my money right now? And they parked it in Bitcoin, and it's sort of catching a sort of flight to safety bid. So be cognizant of that. And if we do see the market sort of stabilize here a little bit, we might see the euphoria in Bitcoin ebb. I thought, and actually the whole sort of the direction I wanted to go in today's conversation, but I've just been talking way too much, and I'm sorry, guys. But the direction I kind of wanted to go today was I put together a matrix of our, and as I said, we had a site member actually build this little algorithm on TradingView that really makes it easy to see the trend. And so I just wanted to, you should be able to visually see what's going on here. Remember I had said earlier in 1980, there was a war on inflation. You guys remember that? War on inflation. Paul Volcker. Rawr. Da Vinci, you should remember that. And through that environment, the US dollar had just an insane rally. Let's see if I think I even tweeted this image out a while ago. Not recently, though. It was quite a while ago. Let's see if I can find it in the images. This might take a minute. You're in here somewhere. I think it's important for you to understand this. Question is, how long ago was it? If anybody can find it really quickly, I'd appreciate it. But it's a chart on the US dollar from back in 1980. Yeah. Oh, wait a minute. Didn't we just go through those pictures? Crazy. Oh, boy. Who knows how long ago it was? It was a while ago. Who can race me? Joshua, you're really good at this stuff. You should be able to find this faster than I can. But anyway, somewhere down in here, we had a chart of the US dollar index from back in 1980, just so you have an understanding of what I'm expecting going forward here. And I don't think the market participants realize how high the US dollar index can go through these cycles. It can get absolutely insane. Where are you? How long ago was that? I guess it was too long ago. Should probably have some background music or something playing while I'm trying to find this. Do 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 do. Do 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 do. Somewhere in all this mess. There's Mr. Happy. That's quite remarkable. I still haven't heard him talk about penis eating. Still waiting for that, Mr. McAfee, if you are watching this. You should at least publicly acknowledge that you're not going to do it. It's always dangerous making those kind of crazy ass statements because some jerk like Brian's going to hold you to account. Ah, fudge. I was kind of hoping I would see it here, but I'm not seeing it anywhere. Damn it. Yeah, fudge. Fudgicles. Did anybody find it? No. It's really interesting too. Actually, this is kind of cool that we saw this. This is the first 2 weeks of the quarter study. This was back done in October. And you could actually make an argument that this down move in the stock market was completely telegraphed. Well, of course, Dav. That's the whole point of it, right? What they don't realize is, hey, there it is. I found it. Woohoo. What they don't realize is that nobody is right 100% of the time. I mean, it just doesn't happen. There's one guy that I used to like to poke fun at that's online, and his whole community saying that he's absolutely brilliant and he's always right. And, oh, man, it's just a potion for disaster. So, my advice to you, Dav, is just tell them to build their plan. Tell them to identify what type of trader they are. That's right. They're setting you up for failure. That's the worst part about it. And just tell them, look, if your setup is 66% of the rate and it produces 2-to-1 risk reward, then you're rocking and rolling. All right. Okay. So back to our conversation here about the US dollar. So this is how dramatic the US dollar index's rallies can be. You have to understand that this was the last fear apex, right? When I take my mouse off of there, you'll see that that's 1980. Very, very important for us to understand that in a weird sort of way, and it kind of sucks. And like I was just down in LA. It's so funny when you ask people in LA, oh, you ever been to Canada? Well, I don't know. Do they have electricity in Canada? I don't know whether I want to go there or not. I mean, it's like, you got to be kidding me. So anyway, that's another conversation for another day. But the point is that the Americans just don't give a flying fuck about the rest of the people in the world. And if they see internally that they have to raise rates for whatever reason it is, they will, and they will drive the entire world economy into recession and maybe even depression, right? Anyway, so the point of the matter here is this was Paul Volcker's war on inflation, and the recession here through 1981-82 was really nasty. And, a lot of the students, I tell you the story about the Vancouver real estate market in 1980, 81, 82. There was a guy in a fairly upscale neighborhood here locally in Vancouver that took out a front page ad in the local newspaper and a big picture of him sitting in his convertible Rolls Royce in front of his car. And so the headline just simply said, if you buy my house, I will throw in this Rolls Royce for free. That's how desperate people were to sell in that type of environment. And we might be heading into that same kind of environment. I've made the argument that we're probably going to look something along these lines. And we're sort of in this mess right now here. I think that there could be another year or so of US dollar insane rally. So I just wanted to mention that because when we look at the currency charts, can you guys see? There is the US dollar index, and it's made a heck of a pivot. Trend is up. Euro, train wreck. Japanese yen, train wreck. British pound, train wreck. Canadian dollar, train wreck. You guys seeing a bit of a theme here? Australian dollar, train wreck. Russian ruble, train wreck. Even the Swiss franc can't avoid this. So the point of the matter here is that we're in, and this is exactly what's supposed to happen at this point in the cycle, right? So it really shouldn't. Yeah, actually, it'd be interesting. What's this? That's the other commodity currency, right? South African rand. Let's see what it looks like. Train wreck, right? Everything's pointing down. And all of the commodity currencies are all screaming lower. And I even said this on the site this morning. Ironically enough, and, Zach, remember we talked about this. If I was going to be investing in anybody through this fear asset cycle peak. Ironically enough, the asset I want to be invested in is US dollars. And I actually want to be buying US real estate now. Imagine that. That's the last thing in the world anybody wants to be buying right now. I would love to be out there shopping for Hawaiian real estate right now in US dollars. All right, sometime soon, sometime soon. Anyway, so the point of the matter here is, just based on that tweet, this can go on pretty damn far, right? Where are we in this cycle? Please understand, everybody, this might go on for a while here. Okay, so not to get too derailed there, I'm sorry, guys, but I really wanted to talk to you guys about that. So, if you use a tool like this, and this is what we teach our level 2ers through, I guess, the second or third week of the program is moving average systems. You can clearly see there's really only one currency to be invested in the world right now, and that's the US dollars. And what does that do? Because you have to understand, this is like growth, growth, growth. These are obviously growth and demand for commodities, and everything's pointing down right now, right? The only thing that's pointing up is the fear proxy, right? Anti-growth proxy. So let's head on over. What does that do to other risk assets in the world? S&P 500 just crossed bearish after that monster bull run, right? The Dow down, the NASDAQ down. E-mini Russell 2000, this is the small cap market getting hammered. We head on over to UK, down. How about over in Germany? Oh, it's a mess. Wow, how about China? Holy crap, what a train wreck. How about Japan? Even Japan now is starting to get whacked. So the point of the matter here is that this has the flow of currencies and the flow of money through these instruments has wide sweeping effects. Then we get on over to, the basic, financial engines of the world, the debt markets. You could argue that this is what actually started the cascade lower, was the idea that the Fed was going to be raising rates. The cost of borrowing was going to go up. We won't get into the 17.5-year cycles, the debt cycle, but it is really, like long and short of it here is I believe that the debt market has rolled over. And now we actually have to get used to like 35 years of rising interest rates. But that's another conversation for another day. The point I would just make here is, short-term interest rates, that's that euro-dollar market we were following, still heading up, right? Remember, this is an inverse relationship. If we look at bond prices, 2 years, the trend is down, interest rates up, 2-year yield up. But you can see they're actually starting to shift, and that's that sort of inverting of the yield curve. 5 years actually has just issued a buy signal. Again, if we have rising bond markets and falling stock markets, that's not growth. That's shrinkage, right? These things are only rallying because they think that the purchasing power of money going forward is getting stronger. That's that deflation conversation that we had over here. So just to continue that theme, and I don't want to take too much time. Sorry, guys, I'm blabbing away here today. 5 years just turned up. Well, that's interesting. 10 years just turned up. So we're actually getting money coming out of the system and actually flowing into fixed income. It's starting to get worried. And then finally, the very long end of the curve, it has not turned up yet. And remember, we talked about this a moment ago. When this thing starts turning up in earnest, that's when we really have to start worrying about bond market yield curve inversion. And oh boy, get ready for a recession. So really important for us to keep an eye on this long end of the curve here. Let's see how it acts over the intervening next few months and weeks. But, as we, if we look around the rest of the world, look how the Japanese bond market has just exploded higher here. What do you think, guys? Andrew, you're getting really good at this. Can you see the bot setup? ES, what does that mean? Should I look at the stocks? But, we can go boom, boom. I'm just going to eyeball this. I won't be too specific. And then we'll go boom, boom. And for my bot setup, I like to have 3 lows to work with. So then that way you got a bit of a window to work with on risk. Oh, look at that. So, interestingly enough, you can see the trend is just starting to ramp up here. You got 1 low, 2 lows, 3 lows. No, not bad. You got a nice little, you could front run the bot here, get in off of these double bottoms, and the bot actually just fired. And look where it's actually suggesting the JGBs want to head up to, all the way up here. So, again, these won't go up if the economy is expanding. They actually, if bond prices are rising, that means yields are falling, which is deflationary. So, and it's interesting that the Japanese bonds are taking off here, because Japan used to be considered the world's 2nd largest economy. Yes, China's come on the scene, blah, 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 blah. I would make the argument a lot of the capital invested in China is Japanese. But we just looked at both. Actually, did we? I think we did. We looked at China. You can clearly see the growth story in China came to a screeching halt there back last April. Geez, better part of a year ago. Yeah, better part. And really, we can't start getting excited until we start seeing W's and stuff here. And we just broke to new lows. So, at best, maybe, we're probably in one of these kind of scenarios where we got a chop, 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 chop kind of idea while we're trying to find the bottom here. But hopefully, if you can just simply connect, like I do with the site members in the education program, we just simply, if you understand the concept of the efficient frontier, a lot of portfolio managers will just either move money into the bond market, out of stock market, out of the bond market into stock market, and back and forth. Just back and forth, right? The blue line here is the stock market. The yellow line is the bond market. So stocks moving up, bonds moving down. Stocks moving down, bonds starting to move back up. So I think that's what's really sort of going on here. And like I said just a moment ago, you can really see that in the Japanese market right now. Where, we even just said a moment ago, the Japanese stocks actually broke along with everybody else. The Chinese stocks broke a while ago. And where is that money going? Well, you can see it's starting to come back into U.S. Treasuries. But it looks to me like actually where the real buying is over in these Japanese government bonds. And I think that makes sense too, because, what we saw through the financial asset crisis was sort of a lack of confidence in the US dollar. I did notice that the Japanese yen has been catching a bit of a bid here recently, so we'll keep an eye on that. But we might find that people actually lose, especially if the Fed is perceived to have lost control and is like politically dominated. We might see actually a flow into Japanese government paper as a flight to safety. That's going to be a really interesting conversation to watch going forward. But you can see the Japanese bond market has had a hell of a rally here recently. Euro, and even interestingly enough, in the face of Italian problems, and if I understand correctly, I think the Italians have been brought in check. I heard recently that the finance minister of Italy got sort of a passing grade by the Eurozone, and they were going to stop shitting on Italy. So we might just see that the European bonds start rocking and rolling, and hopefully everybody can see the potential bullish bots that are forming on European bond market. And the irony of it all is I don't even think these guys have gotten back to actually even paying you to hold the paper. I think there's still like negative interest rates, but I'm not totally positive on that. But you can see the bot levels for trend continuation setting up here. Yeah. Oh, look at that. Isn't that incredible? Andrew, have you been seeing this? And I know, and I love working with Andrew, because Andrew, man, he picked up this stuff so quickly. Some people just get this stuff so damn quick. So other people don't. Take it easy, Joshua. Great to see you, Mr. Demon Hunter. But what we often see happen is that the market will actually set the trade up itself. And so you can actually see that the market is setting this level up here. Isn't that incredible? It's absolutely incredible to see this happen. And it doesn't matter whether it's an altcoin, whether it's a stock, whether it's euro bonds, whether it's a currency, whether it's goddamn broiler chickens. It's remarkable how this works. So, actually, I was just talking to her this morning, and baby's doing fine. Our LJs, right, set up off of a trend line break, and you can see how that's setting up as well, right? Isn't that incredible? So cool. If anything, Andrew, you got to get Reza and your little programming buddy to get their heads wrapped around algoritmizing this, right? And then you guys are going to be rocking and rolling. So anyway, the point of the matter here is, like we saw, U.S. bond market's trying to turn up. Japanese bond market is already turned up. It looks like the European bond market is trying to rock and roll here. So we'll see how that goes. And then, of course, our final, piece to all this was what is sort of the inflation deflation expectations. I love this little trending model. It just sort of keeps it really simple. Right now, when you see red, that's deflationary. When you see green, that's inflationary. So as we've talked about recently, the trend over the past few years has definitely been towards deflation. I think we were getting close to inflation. And I think this is exactly what the Fed kind of wanted, right? Was they wanted things to get back to sort of parity here. But as we said just recently, the market, pricing in the Democrat win in the U.S. government has sort of repriced the entire market. And, also, in my opinion, a vote of confidence about the gentleman who's running the United States of America executive branch right now. Something is disconnected here. And it's interesting how we're just flashing a bear signal here. So the little inflationary push that we just saw over the past, 6-8 months seems to have been ground to a halt. And now we have to see how deep does this deflationary push go here. All right, so heading on, we'll take a look at the metals. It is now this fascinates me. And actually, you know what? I don't want to do the metals first. I want to do energy. So the primary component in all sort of commodity-based inflation proxies is energy. Energy always leads everything. So coming out of the 2000 recession, it was literally energy that started this current commodity cycle. Can everybody see how this bottom came in here on energy prices? Right here, right? 1999. There's the dot-com boom, right? You could argue the market was leading. It was in deflation in through the end of the dot-com boom, and then it shifted right there. Right, and that is basically March of 1999. And actually, that might be a really good reference point for everybody to keep in mind going forward, right? What is that price? That's the base of energy, and you can see it's like between $10 and $14 a barrel. There were, certain political factions that were in control of the United States of America through the early part of the commodity cycle. And you could make an argument that they took advantage of this demographic situation. They knew what was coming, and they just sort of, beat the drums, beat the drums, beat the drums. And they did whatever they could to try and get this price of this asset as absolutely as high as possible. From 10, and ironically enough, hopefully everybody can see, $10, $15 a barrel. This was just nothing more than a 10x move. Right, to $150 a barrel. Of course, lots of stocks did many multiples of that, but the commodity, in essence, was taken to a tenfold increase. Is that rate of growth sustainable over time? And what was really interesting was this was basically the 2008 Olympics, and literally on that event, the Chinese just walked away from the market, and everything collapsed on the other side of that Chinese Olympics. Interestingly enough, the political powers that were in charge of Washington at that point, they all basically ran out of Washington in unison, and the other guys took over. And interestingly enough, you can see that they basically brought the oil market right back down to the original breakout level, where it probably should have been. If we just look at like long-term trend lines, you can see that that's basically where the price should have been. It had no business being up here, but gee whiz, have you ever heard of politicians maybe slightly manipulating markets to get to meet their desires? I wonder. Anyway, the point of the matter here is there is the trend. And you might argue here we are battling right at the long-term trend. Right? Really nothing shocking here. But what is really interesting is since Mr. Trump's election, this part of the market caught a friendly ear out of Washington. The Congress was basically in oil's back pocket, totally owned, all the politicians owned by the oil industry. And you can make an argument that, the writing's on the walls, that, that is going to change. And then, of course, funny little things like state-sponsored assassinations don't really resonate well with the public. And you might argue also, too, things like Mr. Tesla has come along, and, Mr. Monks, I guess, has come along. And, I'd actually make the argument that oil is a 20th century story. By the end of the 21st century, my hunch is, combustion engine transportation will be sort of us like thinking about like horse and carriages, right? Oh my God, I can't believe you'd actually do that, right? Only time will tell, but you can see, not only Tesla has, basically gone full production mode, but you could make the argument that China's getting in on the game. And it's actually interesting, just on a side, we're constantly talking stock in the lounge. I think Tesla is going to do perfectly fine. But what I found really interesting was we took a look at that Chinese Tesla, and this thing is, it's bleeding money, losing huge amounts of money, trading at a fairly substantial price to book. And this kind of looks like a bear flag to me. In fact, this might even be, Andrew, can you see the bearish bot here? I don't know whether you can see that or not. But I got a funny feeling that this thing's going to get just destroyed. So you got 1 high, 2 highs, 3 highs, 4 highs. I bet you we could start drawing bot levels off of this, eh? And yeah, I mean, the stock price is so low. It's only like $6 a share or something. So, I mean, I don't know whether you really want to short a $6 stock, but, it's got like 1 billion shares out or some crazy ass number like that. So, I think the point that, whether this is a buy or whether it needs to go lower, that's another conversation. But I think the writing's on the walls for things like energy. I think it's going to be awfully, awfully tough for energy going forward. And then, of course, we're at the end of that commodity cycle, right? So, interestingly enough, I would actually make the argument that really I don't see any reason why crude can't come back down to these levels down in here. And so the point that I wanted to make just here about, why did this inflation proxy break as hard as it did? Well, a huge part of that inflation expectation is what is the cost of energy. And you can clearly see energy prices here have almost been cut in half just over the past few months. I mean, that's dramatic. And then also, too, if we remember the American political system, the U.S. House of Representatives, they're the ones that control the purse strings. And, one might make the argument that now that that's shifted back over to the Democrats, remember the last time the Democrats controlled Congress was like through this mess. I'm not totally certain on that, but I do know that energy doesn't do well when the Democrats are in control of Congress. Anyway, so the point that I would just make is, you're trying to figure out why did that inflation proxy break as hard as it did? Well, and I would make the argument that it's energy. And what's really interesting is it's not just sort of crude oil. If it was just crude unto itself, then okay, well, that would be deal withable. But here's the European proxy for crude, Brent. It also broke violently. And then we look at things like heating oil futures. They're just starting to trend down in earnest. And we look at things and really, the American consumer is dominated by the price of gasoline. You can see that on balance, especially after Mr. Trump's election, gasoline prices were trending higher nicely, and now they've gone through a distribution and they've broken as well. So you can really see that the inflation problem is coming out of the system. Now, really interesting. Are there any areas of the market that I do like? And I'm actually very interested in natural gas. And you can see that coming out of that election window, holy crap, did natural gas ever move higher? And you can make the argument there's the W, right? Here would be the nice little buy signal right in there. Right, and then pullbacks against this structure or buy, especially if you get the market trending nicely in your favor. And woohoo! Now, I'm a little concerned that maybe this is a little too far, too fast. You can see how wide these the spread is in these moving averages. Usually when it gets wide like this, it's got to contract a bit. So I don't know whether that was the entire move priced in. You can see this big old gap here. But if I was interested in the long side, looking at the way the stock market's acting, look at the way, all the currencies are acting. But I really want to try and hunt for long ideas. I like the idea of being in natural gas. An interesting thing about natural gas is, like the stock market topped out, .com boom topped out in like 99, 2000. Remember we showed you that. But through that recession, look how natural gas actually had a pretty good go of it. So interestingly enough, right, this was a pretty tough time in the stock market, but you can actually see natural gas prices did pretty well here through the beginning of the century. So I've personally found that natural gas actually does fairly well in recessionary environments. So this is one market, and it's one of the few markets that's actually painting an uptrending market. There's not many of them out there, right? And of course, you've heard me talking lots recently about nuclear. I'm very interested in nuclear, and more importantly, I'm interested in the companies surrounding the uranium mining business. And interestingly enough, one stock that I bought over the past month or two, it's up about 50% from where we bought it. And it's a supplier of aggregates to the uranium construction industry. Try and figure that one out. But the long and short of it here is this is one of the very few markets that I actually found that's actually trending up right now. So and you've probably heard me in my recent tweets and rants and stuff about me liking energy, but specifically in the nuclear space. So hopefully that helps you see why I'm jazzed about natural gas and I'm jazzed about nuclear, just from a simple trending perspective. Everything else here looks like a train wreck. Now, heading over to the metals. This is really interesting, and I'm not quite sure how to interpret this, but gold is trying to pivot higher here. And, our regular show, Monday to Friday, we talk lots with the Bear. He's actually in the gold business itself, so it's really interesting to listen to his take, seasonality and stuff. It's, like on a daily basis, we look at all the gold stocks and yeah, I mean, they've enjoyed a really nice rally. I just don't know whether I can justify chasing them. Something like a Barrick, for example, I went in, and I talked to you earlier about derivatives information in the stock market has me interested in the long side and in a few energy names. I actually did have a derivatives buy signal come in here on Barrick, and I bought the calls here, and we made great money on the trade up into this area. It worked perfectly, great profit. So, if anything, looking at the U.S. stock market, the big financials, General Electric, those the oil stocks, this is the kind of scenario I'm thinking. I don't know whether I can come in here and actually play this realistically here right now. On the site, we had some fun looking at the New Year call options, and we had, you can see this bot setting up off the 25 level, just like we talked about with, what was that? It was like the bond market or something in Europe. Hopefully you can see the AB equals CD. And just for conversation, as the trade was setting up, we took a look at some of the short-term options. And it turns out that they actually had one hell of a rally here. Really, really nice little trade. But this isn't the kind of conversation I want to have with the public. This gets into really nitty-gritty trading. And, can I justify going and buying stocks like, Anglo Gold here? I mean, can I buy that after that kind of run? Unfortunately, a guy like me, I can't. So I'm going to have to leave the gold market as it is right now. And it's interesting because gold's the only one that's doing it, right? If we look at silver, oh boy, still very bearish. Copper is professor of economics. You can see after the Trump election, oh boy, copper really went nuts. And actually, it was really cool. One of our site members did very, very well on a call here, copper coming out of the election. And then clearly, I guess, coming out of the summer here, copper got bitch slapped back down and has been trending lower since. And professor of economics, we should listen to copper. He's not very happy right now. Other precious metals that I'm interested in, platinum, basically not confirming what we're seeing on gold here. I'm a little leery about what's going on here in the gold market. We just talked about that in a moment. I can't chase that. If we do get pullbacks against these lows, I might take a good look at this, but I can't do anything there right now. But this is interesting. Mr. Trump's been going on about tariffs, so I think it makes sense why the aluminum market is higher. But like most of the world's palladium, we like to use palladium as a nice proxy for sort of what they call the rare earths. Most of the palladium supply is dominated and most of it's in Russia. So is this a political football now here? I don't know, but the rare earths are still very strong. So I'm not going to discount that. And interestingly enough, there are some rare earth stocks that I'm actually really interested in right now. So, I think that's an area of the market we can still take a good look at. But like the industrial metals, kind of like copper, like zinc. Oh my goodness. Zinc just looks like a train wreck here. And then if we actually look at the gold and silver stocks themselves, and usually they say that the gold and silver stocks are actually lead the commodity. So you can see that they're still trending down rather nicely here. So I don't think that they've turned up here. Like I said, gold is has issued a bit of a buy signal here on the moving averages. It's a conundrum for me right now what to do about gold. Just on a side note, what am I buying, Brian, personally? I'm actually out there. I really like hunting venture cap names that have been cleaned up and rolled back. Options to directors, shares for debt, get in where the directors are long. And I'm actually buying names that are in sort of the rare earth space. So I've been pretty active buying up. And this is very, Brian was a VSE penny stockbroker for many years, so he's very comfortable in this space. If you're not comfortable in this space, be damn careful. So go slowly here. But, things like this Orestone, very interested, ORS, Timberline, TBR, this New Carlin, LAD. I just went and picked up a bit of that. And interestingly enough, these stocks are actually catching a bit of a bid through this stock market meltdown. All right. Why? Well, because I only buy where the directors are long. And if you can get in at or below where the directors are long, odds are they're going to come in and defend the stock because they don't want to be underwater. Let's see. Any others that I've been buying here? Here's a couple in the sort of rare earth space. Lithium Energy, LEP, did a little bit of buying there recently. VLT, Voltaic Minerals. There's a nice esoteric name for you. I did a little bit of buying in those. You can see on this Vanadian Energy. I'm trying to sneak my way in, but all of these names I'm buying at or below where the directors are long. Okay, so let's see. We talked bonds. We talked energy, right? Love nuclear, love natural gas. We talked metals, a little bit of a conundrum in the gold market. Rare earth still looks strong to me. Everything else kind of looks poopy. Soft commodities, I don't really see anything too dramatic going on here, but I thought I'd just do it here for you guys to see that I follow the commodities very closely. Coffee was trying to pivot here, but is broken back down. Cocoa, nothing really to get excited about there. Interesting, sugar is trying to turn here. We'll keep an eye on sugar. It's right against key support low here. They did leave a little bit of a gap, and the problem here is that this is a futures contract issue. Once we get through the fall contract, you get a big repricing into the March contract. So this will probably have to come back down against these lows, but we'll keep an eye on that. Cotton, along with a lot of the grains that we see recently, breaking nastily. And actually, 90 some odd cents a pound for copper or cotton, that's actually a pretty good price. So shouldn't surprise us to see cotton coming off here. OJ, lumber, and of course, great proxy on Canada. Really clean breakdown there in lumber prices. And I think we showed you a Canadian dollar recently just getting its head handed to it. Heading on over to the grains. Seen a little bit of uppy out of the beans. But the cracks, don't see a heck of a lot going on there. Meal and oil still weak. There's cotton again, foods and fibers. Sometimes we include that. Interesting to see. Wheat's actually trying to hold on to a bit of a rally here. So we'll keep an eye on wheat. But you can see kind of rolling over here a little bit. And actually interesting, when I was a commodities broker, we used to always talk about oats as a great leading indicator. So ironically enough, actually, oats looks really interesting in here. You can see this cheeky little gap right down in here. But if we get any sort of pullback into sort of January, February against these lows, might take a serious look at oats heading into the spring. And then lastly, we were looking at the meats. And interestingly enough, really like the look of feeder cattle in here, especially if the grains are looking heavy. I think feeders could actually have a bit of a run here. So I might even take a good look at feeders here through the spring as well. And it was interesting. There was a guy on Twitter and stuff who was actually saying that he thinks that the hogs business for 2019 is going to be pretty robust. So I'm going to be watching this. You can see the W's here. If this thing rolls over and starts actually printing green, I might actually see if I can take a shot on the long side in the hogs market here going forward. Okay, so I just wanted to do an overview of the trend, what I see happening in the trends in the market. And really, like I said before, the only markets that are really jumping out at me really strong is I really like this natural gas and I like uranium here. Other than that, and I do kind of like the bonds, and I do have a bond long proxy still on the books heading into March. We'll see how that does, but on balance, I think probably in the short term, maybe we've gotten a little bit too overdone here. Heading into the end of the year, once we get through that T+3 settlement window, I think probably stocks are going to find a bit of a bid here. But I kind of do like the bonds on the long side here for the next little while. And that's really, I think about a month or so ago, somebody asked me just to do a thorough review of the bond market. And where the hell is that? Around here somewhere. Where are you, bonds? Bonds, I know you're around here somewhere. Oh, here we are. And did a big sort of video review, the whole thing on the bonds. And we actually had a really cool little Leanne James setup working here, and its target is this 50% level. So we've almost hit that target level. We're coming into horizontal support and resistance here. You can see all the traffic. My hunch is there needs to be a bit of a backfill. This was a hell of a run up here. So I wouldn't be surprised if there's a bit of a pause here. But ultimately, I'm looking just for a nice simple 50% tag of that bond move. And I'm anticipating that happening into sort of like first quarter of the new year. So we'll see how that goes. All right. We'll head on over to, and actually this is probably a good dovetail. You've probably seen on Twitter and stuff. If I can find the darn chart. Too many charts. My head's going to explode. Where are you? Maybe it's not even on this screen. Let's see. Give me a second. Oh, I think it's here. Let's get rid of all this stuff. Okay. I've been sort of spouting this out online. There's the break in the U.S. stocks. Here's the gold. Still very curious as to how this gold plays out. Actually getting a bit of a buy signal here. We'll see how that goes. I don't know whether I have a setup. Like I said, it's a bit late on that. There's the energy, just getting its head handed to it. And here's good old Bitcoin. And I know all of you crypto people and Twitter people and stuff are like, when's he going to talk about goddamn Bitcoin? All right, here is our Bitcoin spiel. What do we say here? You know, big face rip up. Market came back down against 6,000. You can see where the moving average is crossed. I actually like to call this like a bow tie. And then wide. So hopefully, whoops, isn't that weird? That disappeared. Anyway, hopefully you can see the bow tie. So this obviously is a pretty important apex here, and gee whiz, $9,000-10,000. I think that makes sense. Oh, you're enjoying this, Chris? That's good. I hope so. Give everybody a whole bunch of stuff to chew on here through the holiday. So, you know, at the very best, we should expect the market to come up and at the very least sort of kiss the underside trend line here. Hopefully you can see that. And, you know, what I used to tell people is if you're in a trending market, don't chase the market, but let moving average checks be your window to get in. So in this particular case, in fact, actually, you can see it pretty much the whole way up. As long as the market was trending higher, i.e., you see green here, and that's the great part about this indicator. It's nice and simple. Check, right? Buying windows, check, buying windows, check, buying windows. You know, the whole way up here, right? Check, buying window, check, buying window. Even here, check, buying window, et cetera, the whole way up, right? Then we came back down into, you could even argue this is to a certain degree kind of cloudish kind of conversation. But back into the cloud, come down to the bottom one, rally back up. Can we accept back above here? This was just a check. Nope. And then more importantly here, the actual trend rolls over here and flashes red. And now you might make the argument it's the exact opposite now. So selling window, selling window, selling window, selling window, selling window. And here we're, at the moment, we're kind of just stuck in no man's land. I know everybody and their brother wants to call a bottom here, but guys, you know, is there any letter of the alphabet we'd like to see to help us maybe get the idea that there is a bottom here? A W. Thank you, Andrew. Right. And, you know, Andrew loves his bot, right? Which is technically just a W inside a W if you're thinking long. So double W's, even sexy. And then, of course, if you're thinking short, right? Double M's. Anyway, the point of the matter here is that at the very best, and this is exactly the I guess you could argue, I mean, it's not exactly, but you could argue this is where the term dead cat bounce comes from, where, I don't know whether we were trending or not. We're definitely in a bearish trending market. Can't fight it. It's a bear, We've come off a new reactionary low and we've bounced straight up. At the very least, right, what we should expect is a test of those lows and then a turn back up. And really, ideally, what we really want to see is just give us a nice trading range. Because if we do this, then that will actually bring these moving averages to the point where they can actually cross back bullish. So for the short term, all we can say is, looks like we got brick wall resistance up here at about $5,000, which makes sense. I actually wouldn't be surprised if we actually kissed the underside of this level, which happens to be the 30 SMA, into some sort of, rally peak. And also, too, try and remember, institutions, they're not really allowed to sell down markets that are just collapsing. If anything, what they're going to do is they're going to let the market break. Of course, public goes short here. They all get wrecked on the counter trend rally. Market rallies right back, and we can use things like fibs, right, to help us sort of see statistical zones of resistance. Gee whiz, there is the reload zone sitting right there at 6,300 off of this particular high. But the point here is they rally the market up, get everybody rah bullish. Public comes in, buy, I got to buy it. And they're literally buying right into those institutional sell orders. And that's how they get filled in size. If they actually wanted to get short through this, and they go and, I'm going to sell 1 million Bitcoins at the market, well, the market will just collapse, right? So, they're going to actually try and engineer a counter trend rally so that they can get those big sell orders off in size. So at the very least, higher time frame weekly chart, this is a dead cat bounce, just simple as that. The trend is still down and we're just trying to find a bottom. I suppose we could go over to these kind of conversations. What does, I'm a big believer in sort of the 4-year cycle, the business cycle. Usually you have like a basing period, then you have okay, are we actually bullish? There's fundamental reasons for the market to move up. The great part about it with crypto is you have things like the halvening events, which are sort of built-in bullish pivots. So, I make the argument that we go through this very normal pattern. And unfortunately for crypto, and this is the kick in the pants, is that we all want mass adoption. I think, a huge part of my community at TRI would love the idea of us just moving away from a fiat currency world and us just all doing our business in Bitcoin. And you go and buy a loaf of bread with Bitcoins and just remove the whole banking system from the equation. I might make an argument that the one way that you can absolutely prevent that is by injecting these absolute insane face rip moves. And then that way, anybody who actually does want to use Bitcoin as a sort of means of doing business, the price is just too volatile. You can't do business in this. And I might argue that the one way to prevent Bitcoin from becoming mass adopted is do this to the price. And the worst part about this is that I even remember at the top here, things got really wonky and of course we had a major scandal here, Mt. Gox and all that. But even through here, like the backlog in transactions, it just got ridiculous. I mean, it got to the point where anybody who was logically looking at this would go, I can't use this. I mean, there was, at this point here, wasn't there, Dav, you'd probably remember this number, wasn't there like 100,000, 200,000 backlog transactions?
Yes.
Oh,
and it was $100.
Yes.
It was $100 per transaction.
Yeah, and the fees, yeah, and you could undercut the time to get the transaction done if you paid a big old whack of fees. right? And a lot of the exchanges, they were just ripping people off, trying to, bypass that wait list. Anyway, that's a whole other conversation for another day. But, one might argue that the very natural resolution of these insane face rips is just to simply take the fluff out of the market. And just like they did in 2014 nutso 2013-14 bull, I like to call this like the hangover year. Now, very simply put, history never repeats itself exactly. It just doesn't. There's too many variables. But we often say that it rhymes. And one might make the argument that, didn't repeat itself exactly the same, but there's a heck of a lot of similarities with this hangover year. And it's been a real pain in the butt. Long and short of it here, price should have never gone these highs. It's unsustainable by the network. And one might argue that there was a little bit of manipulation in this market. Just a little bit. We talked a little bit about the CME futures listing event, and it's interesting listening to one Bloomberg guy recently. He goes, the only reason why there's futures, there's only one reason why there's futures markets. Only one. I mean, I might argue that there are other reasons, but his attitude was you only have a futures market if you want to forward sell. Simple as that. So, was this finessed to get to a price where, keep in mind, like 5 Bitcoins on the CME contract at $20,000 meant that the contract was $100,000, meant that, 5-10% premium. You had to put up $5,000-$10,000 in just margin just to put a position on. So that completely froze the public out of participating because you didn't know how high this damn thing was going to go. And only the people that really knew that this was a top on this event actually had deep enough pockets to be able to put these shorts on. And sure enough, on that event, boom, out comes the era of the market. And it really sucks for all the crypto enthusiasts of the world because, in essence, what this really is saying is that, man, this thing was played hard. And I do remember specifically when we were going through all sort of this period, where was Bitcoin going to top? We all sort of, collectively came to the conclusion that, maybe 5,000, maybe 10,000 was a top. So the fact that they took it to 20, of course, left everybody awestruck, including myself. I mean, I just couldn't believe how they did this. But at the same time, too, you could argue that anything sort of above this level here is just fluff, which sucks. And now I make the argument, and I thought this was fascinating to watch play out because I've made the argument all along that Bitcoin literally was this asset cycle's fear proxy. And, I won't go into all the, in fact, actually, I did a lengthy tutorial that our marketing guy is going to put out on sort of, what did this fear asset cycle proxy look like and what should we expect going forward, yada, yada, yada. But I did have one very simple chart right here, right? This was the gold market in 1980, that particular fear cycle apex, and this was the silver market in 1980. And just insane. I mean, is this silver price sustainable over time? Come on. Why would the silver price do this, right? And of course, Dav's going to sit here and go, because the whole system's corrupt. I might make the argument, and I've made the argument all along. I will not change my argument. There were 2 brothers that tried to corner the silver market here. And so as a result, silver prices went absolutely insane. And interestingly enough, after this fear apex event, all of a sudden, mysteriously, the world came up with all the silver these guys ever wanted, and photograph companies, which use a lot of silver in production, said, you want silver, Merry Christmas, we'll give you all the silver you ever want. Anyway, that's here nor there. The point that I'm trying to make here is Bitcoin, here is Ethereum. Do you see any similarities? I hope so, because in essence, this was our fear apex event, and the other side of it seems to be shockingly similar. Quite remarkable, really. The good part about it, I think, is that we're, like on the gold sort of correction, I think we're actually sort of in this window here. And on the silver correction, we're in sort of this window here, which means that I think there is a very good possibility of a nice counter trend rally. The only issue, though, is where does this counter trend rally take us? And like I said, like if we looked at Bitcoin, you can't realistically, as an institution, short this down market. You've got to wait for the counter trend rally. And my hunch is it's probably somewhere into this traffic area, right? And then if we look at Ethereum, I can't short down here. Where am I likely to short? Same sort of thing as the silver. Probably we should be thinking about like 50% retracements of this move, which would take us up into this area. So that's what I'm going to be sort of watching for through the spring and sort of summer, is that dead cat bounce back up into 50% levels here, which I think is I don't think it's outlandish to look for these, right? So actually that kind of cool. That makes sense. So if we have, Ethereum bounces up into this traffic area, Bitcoin bounces up into this traffic area. You see, you've often heard Brian say wicks and tails like to be eaten. That funny little wick there sure could use some attention. And interestingly enough, if you actually look at the market structure signals, the last sort of M that came in is actually right off of here. So a rally into this area to test this original M here, I think makes perfect sense, right? So that's up into that area there. So that's sort of what I'm thinking going forward here. But as we said before, the trend is still down. This is nothing more than just dead cat bounce. And also, too, things like Ethereum, kind of like what I talked about with the stock market. We're coming to the end of the tax loss selling window. If you did do the ICOs and all that and you got absolutely destroyed, those people all sort of gave up through here. We're coming into the end of that tax loss selling window. One might make the argument the incentive to actually dump this down here, it's leaving. It's vanishing. The window is closing. And then also to sort of throw the community a bone, if I'm not mistaken, Mr. Vitalik came out and said, here's a couple of Ethereums for you guys to keep you going because I like your project. So, if he's gotten to the point where he's just handing out candy now to try and keep these ideas alive, I think most of the pain has been built into the price here. So those are some things to think about here with regard to the big boys. It feels like we're at some sort of pivot, but at the same time, too, I don't have a quote unquote the bottom in and the trend is still down. Could we very easily, the beginning of the year, roll over and make another new low here? Sure. Totally possible. And, if we go back to our hangover conversation, that's basically what Bitcoin did the last cycle. So don't be shocked, right? Here is that comparison. I just happened to have grabbed an arbitrary date here. This was October 21st. And I just overlaid what did the 2014 hangover look like. And actually, that's what this chart is. And what does this year's meltdown look like? And interestingly enough, so overlaid, we didn't get this initial dump. Market just went sideways. So then that means this counter trend rally was, kind of discounted with this dump. We just sort of went sideways. We did have a dip, just like we had a dip here, and we did have a rally, just like we had here. But because the dip wasn't nearly as severe, the rally also wasn't nearly as severe. We did end up rolling over here, and just like in 2014, man, they rolled her over here and broke. And now I'm wondering, and this is sort of the tweets that I put out recently, I feel like we're in this sort of window right here. And I'm a little worried that our current counter trend rally, again, coming up against sort of previous highs, I wonder whether, we have to sort of waffle a little bit here, and then we need the one more big dump the beginning of the year to sort of mark the final bottom. I haven't really heard the capitulation event, oh my God, this thing's all, get me out. It's going to zero. I hear a lot of sort of talking heads in the media, sort of, and one guy in particular, I'm still waiting for my Nautilus coin to do something. Mr. What the hell's that guy's name again? I haven't said his name in so long, I've completely forgotten. Brian something. Is it Armstrong? I can't remember. Anyway, Brian Kelly. Thank you very much, Brian. He sort of threw in the towel, but not really. He kind of backtracked a little bit. So, what I really want is, if you guys remember in 2014, there was one of this sort of, original developers. I think his name was Mike Hearn, who came out at this event and said, that's it, I'm out, get me out. I think he had like 30,000 Bitcoin or something like that. Put it all up for sale, and the market went and chewed right through it, chomp, 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 and then that was the bottom. So I'm actually looking for one more big FU before we actually hit the bottom. And I have a feeling it needs to happen on the other side of the calendar year event. Only time will tell, right? We showed you on the weekly chart. This is a new weekly low. This is a V bottom. You can even see on the daily chart, this is still a V bottom. I think that there was some great long shots that people enjoyed off of this pivot. Remember, I did that bot setup. The market actually went further than I was expecting. And this 1.618, it has not been traded to. And this was sort of how I wanted to leave off today was I'm a little worried that, number one, all we've done off of this low is just dead cat bounce right into a natural level that if you were going to short Bitcoin, you're not going to dump it down here. You're going to wait for the counter trend rally back into the original market structure top, reload zones, all that kind of conversation. You can see how they took the market back above the POC, and now we're starting to waffle. It's interesting on the site. I think, I don't know whether I showed you this. I think I did, but maybe I didn't. On the site, Dav is here. And Dav, you should be tickled pink by this. But in essence, Sen algoritmized the Davo, and Sjord implemented the Davo on the platform, so it just spits out the signals on a regular basis. And we got a lot of buy signals here that came in off the alts. So I don't know whether this Bitcoin rally is actually about Bitcoin or maybe just a whole bunch of money came into the space to go and buy some of these alts. I think I had shown you at the beginning of the conversation here today, the alts have done really, really well. But I also noticed too that there was even people on Twitter saying, holy crap, too many alts are rallying. This can't be a real bottom. So be careful here. And you can see these things are going parabolic now. So I just wonder whether some of this Bitcoin rally off the bottom is like short covering, position squaring. People are playing the alts. It's not really a Bitcoin bottom. It's more that, like things like Ethereum just got too washed out. And you never know, maybe a nice Christmas gift too. There was a guy, Wall Street guy, I can't remember his name just off the top of my head, who said that he was Bitcoin short off of that CME top. And he took his profits here. And frankly speaking, this isn't such a terrible place to, close out shorts. If we look at this chart again here, do we really want to get into the nuance of trying to pick this particular bottom exactly and take the chance of the market just ratcheting violently away from that one last dump, and you actually have to end up closing your short maybe even higher? I think, hats off to the guy. I think he said he closed most of his shorts out down in here. And you can even see if this is similar to the 2014 hangover year, we haven't got a hell of a lot more to go. If anything, we're probably coming into the bottoming neighborhood. So, guys covering shorts and, having a really nice Christmas, I actually think that makes a lot of sense. So where does that sort of leave us now? As I sort of said, until we actually start Wing out here and the trend starts actually turning back up, right? Remember our nice little trending model here. I have to think of this as nothing more than just a dead cat bounce. And that's fine. Just let it have its bounce. As soon as we do start Wing out here, and keep in mind, right, they say that the typical bear market is 18 months in duration, which I think works out to something like 75 bars or something like that. 52 plus 26 is 78, something like that. So right there. I actually like the idea of the market, finding some sort of bottom and then going sideways and just messing with people and then breaking out. That's sort of what I'm thinking needs to happen here, and at the end of that. And then also, too, we have to ask ourselves, was there anything that sort of fundamentally happened in the space to sort of encourage Bitcoin to bottom in 2014 the way that it did? All right, if we go back to 2014, sort of that expectation of, big dump, then sideways consolidation, and then lift. And the answer is that Litecoin had its halvening. And I might make an argument, and really what we should all do, anybody who's watching this video is a TRIer and is planning on coming to TRI Con in next July in Vancouver. Might as well start doing the sales pitch now, eh? We're going to have a big sort of, everybody has to come back to the mothership. I went out to Europe and went down to California and stuff. Now, this coming summer, everybody has to come to Vancouver. So I might make the argument that if you want to come to Vancouver, that we should actually probably let Litecoin pay for the trip. And why do I say that? If we look at Litecoin and the way that it acted, and where's the best way to do this? Maybe, I don't know whether this is old enough. If we actually see what Litecoin did through its halvening, I don't know whether this goes. Yeah, there it is. All right, so this was the last Litecoin halvening right through here. So I am going to be specifically hunting Litecoin's bottom, looking for this event into its halvening window. So my hunch, Andrew, right? You want to be a total rock star. I think that there's money to be made into this halvening event, right? And let's all, maybe we should try and make enough money on the leverage margin play that maybe we can go buy like a fancy sports car or something with the profits. And if anything, Riza, this is where I think you need to be concentrating your effort, the next 6 months. So, yeah, I wasn't going to say the word, but everybody that's in the lounge here knows exactly what I'm talking about. So this, in my opinion, will be a catalyst to change the record. Like right now, it's all about RET and the 2017 top, and we've got to change that tape recorder, right? Take that tape out of the, everybody remembers answering machines. Take that tape out of the answering machine, and let's put a new tape in. And what was interesting through this halvening event was, I don't know, do you guys remember? There was a gentleman in China that was running a Ponzi scheme, and he ran this thing up dramatically. I mean, really, I don't care. But the point is that it changed the conversation from this stuff over here. In essence, people started thinking about a different conversation to have about crypto. So that's what I think actually has to happen here over the next 6 months. I might make the argument that the money's probably not going to be made in Bitcoin. It's going to be made in stuff like Litecoin. So I think, and it's interesting that we already have sort of the smatterings of bottoms coming in on these altcoins, because a lot of these altcoins actually look extremely attractive. I mean, you can see it. Look at this chart, right? If we do a 50% rule, is there even a chance of you doubling your money into that halvening event? Well, there's 50% on Litecoin going back just off of this range, and here we are at 34 bucks. That's a bit of profit, eh? I don't know. Does anybody see that? I hope so. I mean, do we necessarily have a W to work with? Maybe you can let this fill out a little bit more. But I think we're starting to get into the window where the fluff has been taken out of this market. And I listened to those guys. If you're listening to this, please change the name of the show. There's no way Wall Street is going to take us seriously if you call your show Shitcoin Talk. Great content, very, very smart individuals. You know, a special shout out to Not So Fast. The guy is a fucking genius. Totally nailed the mining scene. Second tier talk. Thank you, Rocker. You guys are very, very smart, but if we want to be taken seriously by the grown-ups in this space, then, you know, I really think we need to have different names for these. But anyway, the point that I'm trying to make here is that I heard on their show, they were saying that Charlie was actually suggesting that $20 was the level he was sort of looking for the market to come back to. So you can make the argument that we're starting to get down into areas that Mr. Lee himself said that we would expect price to come down to. If we look at things like reload zones, we are, you know, well at or below the reload zone. So we can definitely make an argument. Little old ladies and stuff can start nibbling away on this. Do we have an outright bottom in here? I don't think so. But nonetheless, you know, I definitely think that these altcoins, some of them, they're just throwing the baby out with the bathwater right now. The signals are coming in. Got to say, man, there's that Dav. There's that signal that Kairos spat up, and geez, what a beautiful looking little trade, eh? If anything, you know, on a name like this, I could totally see something like down, up, back to the neckline. Nice dip against these lows, and that carves out a massive head and shoulders. I could definitely see something like that. Try not to chase. Not a good idea to be chasing these things as they're ratcheting up here. And, you know, probably if we do things like reload zones, I don't know where this rally is going to exhaust itself, but interesting. 78.6 can take us back down to the original bottom. So if we change this to a line chart, right, hopefully you can see down, up, and look at that tight little W down in there. But you can see reload zone is going to take us down into here. And that's assumption that we go all the way up there. I don't know where we're going to top out. But nonetheless, you know, use the reload zone tool to help you keep you honest. It works really well. Or pop on the site and take the Kairos signals as they come in. Because, damn, that's pretty sick. There's that Litecoin we talked about just a moment ago. But what I wanted to show you, and maybe I just don't have enough time today, but there are just some fantastic coins out there. Excuse me. Look at that W. I mean, you've heard Brian talk about W's before. I mean, look at this. This is ridiculous. You know, if anything, this is such a good lesson. Don't chase up markets, guys, please. But, you know, I don't know whether you want to use the wick or not. But, you know, if we just do reload zones, you can see where the original bottom is here. Probably there's a bunch of gaps down in here as well. But, you know, wait for reload zones. Wait for your W's. You know, there was a counter trend rally off of that one. I'm loving what I'm seeing here. Beautiful signals, right? There is a lot of money to be made here in crypto right now. In fact, I'll probably just, why don't we leave the video off with that? You want something to chew on that looks really interesting? You know, this is 760 sats. I don't know whether it's really a good idea to go chase this right here. You know, Brian, he's going to say work your bids at reload zones. You can see 78.6 is that original bottom. 61.8 is there. It looks like there's a gap right in there. So if you can, maybe work a stink bid down in this level and on some sort of pullback, you can get filled here. But, wow, there is just a lot of money to be made in this space right now. So have some fun, guys, right? Get out there, have some fun. You know, you know, I'll tell you on a regular basis, and, you know, I don't know whether anybody on the YouTube page is a site member or not, but you guys in the lounge, are you banging out any winners right now? I know that Andrew guy, he was banging out some winners. Kevin, I think I've seen you banging out winners. The point here is that there is money to be made, right? And the irony of it all is hopefully, you know, if you're, I don't know whether you like this name or not, but if you had gone boobity boop and then put on your reload zone, you can see that you should have been a buyer through this window here. And hell, geez, 400 sats, 900 sats. Anybody who bought this reload zone right in here, you actually got yourself a free position already. So they are out there, people. You know, if you need to come on the site and get schooled up, how to build a trading plan, how to identify what type of risk taker you are, how to try and remove as much anxiety out of the money management process as possible, get your butt on the site. I think we start a new school term in January. And I think we have a whole bunch of level oneers who just graduated. They're moving on to the level 2 program. And it's great to watch the progress of students, you know, go from, oh man, I don't know what to do in the market to, oh no, sorry, this is a piece of cake, right? It's great watching that transformation in people. All right. So I think I'm going to leave it at that for today. I've been talking forever. I hope you guys got some value out of all of this. You know, we leave off perfectly good example of what bullish setups look like. This guy looks like he's turning the corner. You know, no guarantees from the management ever. And, you know, like Dav, we were kind of joking about that earlier. Don't even put yourself into the position of being the guy who calls markets, because I can absolutely guarantee you, you may be right. You may go on a winning streak. Man, I remember one time in the crude pits, I went on like a fucking 2 or 3 week tear where every fucking trade worked. And it was just like, you know, and the guys on the floor are asking, what the hell's that Beamish guy doing, right? Kind of stuff. That's a trap, because I've seen it happen so many times. I know for certain my model works 66% of the time. I always say it's between 60 and 70%. So if I go on a tear of like 10, 20 trades in a row, then I actually start to get worried, because then what that means is I actually have to go through a period where maybe 5 or 6 trades in a row don't work. So, you know, if you can actually just set yourself up with a trading plan that says, I don't have to be right all the time. That's not part of my job description. My job description is, when I am right, I get paid substantially more than when I'm wrong. And you have to have the patience and discipline to identify realistic price objectives and then wait for those levels to be hit. And if you are right 60, 70% of the time, which explicitly implies you're going to be wrong 30, 40% of the time. But if you are right 60, 70% of the time, and your reward of risk taken is at least twice, then you'll make all the money you ever need. And you don't need to fall into that trap of, oh, this guy's a guru and he's always right. And because I guarantee you it's a pit, and you're just setting yourself up for failure if you go down that road. All right. So I think I'm going to leave the conversation at that today. Hope you all got some good value. I'm going to head off and spend the afternoon with my boy. And then we'll be back in the saddle, of course, first thing tomorrow morning on the site, our daily brief. We do about an hour, 2 hours of this in the mornings. Lots of fun with the crew. And I hope you all have yourself a great Christmas, which is Tuesday. Okay, guys. I don't know whether I'm going to get another episode in here before the new. Oh, yeah. Okay. So we'll probably do another free episode for YouTube on the 30th. So have yourselves a great Christmas. Remember, too, the Chinese love to fuck around with Bitcoin around Christmas. So be careful there, everybody. We'll do another Broiler Chickens in a week, sort of give you an idea of what we're looking for now. As you can see, El Tangonator setups actually fired off of the lower time frame shorts in trade windows. So at the very least, as it stands right now, I'm looking for sideways and a serious test of our first stop target, 38.2. You can see if that's given, then that creates a big old nasty M, and we're probably heading down here in earnest. What I've been posting on the site as just a simple roadmap for people, which I would prefer talking to the YouTube audience in this sort of time frame, is, and I put this tweet out, actually, this is probably a good dovetail to finish on. One of the most recent tweets I put out was here: Bitcoin bull bear battle lines have been drawn heading into the weekend. I still think those bull bear battle lines are being respected. It almost feels to me like all the funny little exchanges, OK Casino and all that, they've all been given instructions just to cool their jets and park price. So there is the bull bear battle lines. If we bust up through the top, then I actually think the odds are we're probably heading up to 4,600 area. If we break down through 38.2s and lose these moving averages, then that's when we should expect a serious test of the lows. So we'll review this chart next Sunday and see how this has resolved. And of course, I'll tweet out sort of images as I see them developing. But for the time being, that's sort of what I think our stage is, right? So what is that? Well, let's call it 35, 3,600 on the casino on the downside. If we lose that, then we're back in the shitter. If we break up in earnest through 4,000, nice big fat round number, that makes sense. Then I think we got a pretty good shot to zip up to this 4,600 area. Okay, you guys have yourselves a great day. Play from a position of strength. Have a Merry Christmas. And of course, if you need help and you're lost, that's the #1 reason why we put this whole website together. Come on over and we'll be more than happy to try and get you pointed in a good direction and maybe even get you in the school program and teach you how professionals sort of approach this thing called trading for a business. All right. Have yourselves a great day, everyone. All the best and bye for now.